Good morning, good afternoon, good evening, everyone. This is the 28th of May. There's a Fed speaker as we speak on the squawk, and in about 5 minutes, we're waiting for the US CV consumer confidence. And so we'll just get things set up and cautiously wait for this news to come out, and then we'll trade the reaction, right? So just to review very briefly what happened yesterday. We were trading the bullish side of the equation, and had we followed the instructions, we would have made money overnight buying red candles or buying support, right? So I literally stopped trading after we stopped the recording. I placed a few trades before bedtime, and that was it. And so now here we are waiting for the US consumer numbers, and I'm hoping to be a buyer. And let's review that. And so if we go to the daily chart, yesterday we experienced the breakout we've been looking for. Overnight, we've made a higher high, higher low. It's bullish. And if we look at the average of 45 compared to what we've done so far, which is about 37, 38, if we fulfill 45 to the downside, we're going to 8,500. If we fulfill the average to the upside.
Kashkari says, I don't think anyone has taken rate increases off the table.
We're looking at 8,900. Right, so we have upper and lower limits.
At 10 a.m. Eastern time, we get USCB consumer confidence forecast 96 on the prior 97, with a range of 99 to 92. And the US sells $70 billion in 3-month bills, prior high yield 5.245%, and a prior bid cover of 2.89. And the US sells $70 billion in 6-month bills, prior high yield 5.16%, and a prior bid cover of 2.92.
So here we are waiting, and it's making or pushing into support, right? So if we move our boxes right there, just in time for our start time, right? Maybe we'll be buying the low. Right, so I started highlighting the ceiling, highlighting the floor. And if we zoom into a 5-minute chart.
Kashkari says, if we are surprised by the data, the Fed will do what we need to do.
And then from here, we can start highlighting the ladder or the rungs on the ladder that we want to be participating with or within. And I'll put one more in the middle there. Something like this. Right? This is just with my mind's eye, nothing spectacular. I'm just looking for shelves, areas where things
were. As Kashkari says, policy is restrictive by most measures, but not all.
There we go. This one here, and that should be okay. All right, so I am looking to go higher over time, and I do want to be a seller above 09. And you're going to say, why 09? Then if we look to the daily or even the hourly, we can see previous resistance, right? The previous high. And so I want to sell, not because we're on our way up, but because we're not going to the target in one shot, right? So I'm playing the next leg, right? So if it's going up, we're buying. Eventually we'll be selling for the next leg down. So let's highlight that, something like this. And hopefully somewhere up here, we'll do something like that. All right, so here we are. Oops,
Fed's Kashkari says the short run neutral rate may have gone up temporarily.
Let's go back to my 5 minutes. And I'm a willing, able participant. We've already dropped 23 pips, and average is about 27 or so, right? We've already dropped 2.5 boxes. I'm willing to be a buyer. Let's just see where to buy. If I look to my left, far enough, there's a level. There you go. Right, there are levels here that we need to be aware of. Stuff like this. Right, so there's one that we're approaching right now.
1 minute remaining.
Just put 2 trades in. I'm now trading 06s. Right, I increased the size yesterday or this morning. So this is officially my box number 1 because I have my first trades there. So I'm willing to be buying for the next 3 to 4 boxes. Ultimately, I'm thinking the euro is going up. We're just trying to figure out where this current down leg is
10 seconds
is going to finish. Maybe this news will help us. All right, let's see. I forgot there was news.
102, 102
Wow.
higher than forecast at 96.
Way higher than forecast. Way higher than forecast. And so I'm buying cheap euros. Four. So now I have my 4 clicks. And if I look closely, I think they're all in the box. Pretty much all in the box. All right, so I have 4 more into this box here. If we go there, oops. This is the wrong size. So I want to buy in this.
So CB consumer confidence prior revised 97.5.
1, 2. I'm
Bear in mind,
participating.
we are shortly expecting the results of the 3- and 6-month bill auctions. I will lead with the high yield.
I'm a buyer if we go a little bit lower. So basically what's happening is we're attempting to see if this is an average move. And if this is an average move, we should, as a result, get an average leg.
US Treasury yields on the long end turned positive after US consumer confidence data. 10-year yield last at 4.478%, and seeing 3-month bill high yield 5.255%, 5.255%. Bid to cover ratio 2.87, 2.87. So the US sells $75 billion in 3-month bills and awards 35.36% of bids at high. And 6-month bill bid cover ratio 3.06, 3.06, high yield 5.17%, 5.17%. So the US sells $75 billion in 6-month bills and awards 0.72% of bids at high.
So as a result of all of this stuff, US 10-year yields slightly up, but not to the moon, right? Into resistance. Dollar index, similar situation, right? We found support and now we're going back up testing for resistance. Right? This is not going to the moon.
Fed's Kashkari says it's best to hold for as long as necessary to gain clarity.
Right, so the US is basically saying they're going to hold interest as is, and the euro already committed to cutting theirs next week for the first time. All right, so there's a policy divergence for you. right, so here's our second box of buys. I'm gonna go to the left to see where the buys are. Somewhere here. Somewhere here, maybe. This area. This little area right there looks promising. So that's 3. Should be enough for now. If we visit these 3 areas, I'll be buying on the way down. A little bit lower would be nice.
So looking at the report here, the expectations index was below 80, the threshold which usually signals a recession ahead. The survey also revealed a possible resurgence in recession concerns. The perceived likelihood of a US recession over the next 12 months rose again in May, with more consumers believing recession is somewhat likely or very likely.
There we go. Right, we don't want to be chasing this on the way down because we kind of see it as a pullback in a bullish market. Right, so we don't want to be selling this. We want to be buying this. We just have to be patient and buy when it's the right time, like this. Right, a little bit lower would be nice. Right, I want to buy this level here. Just planning ahead. There we go. That's 1. If we go deeper, I'll buy 2, 3, and then the bottom of the box will be 4. If it goes up, we're closing trades. If it goes down, we're spreading the risk that's allocated to this. It's not a surprise. It's just a job we have to do. A little bit more. Come on. Oh, come on, come on, come on. All right, we're going down the ladder. We've come from the top. 1, 2, 3, 4, 5 rungs. Right? They're just drawn with our eye. They're not spaced evenly. They're pretty accurate nonetheless. Right? Something like this, that's kind of what we're looking for. There's our first winner of the day.
ECB's note says the risk of hard landing in the Eurozone is receding quite rapidly.
7 minutes in, we've closed 1 winner. Let's continue this. Right? We'll recycle that trade if we're presented with the opportunity. Otherwise, it will close the trades that are already open. There's a red candle. I'd like to see it a little bit deeper. Somewhere around here would be nice. Focus on consistency. We don't have to change much. If anything, I change my size every 2 or 3 months.
The USCB consumer confidence data says notably average 12-month inflation expectations ticked up from 5.3% to 5.4%.
Couple of winners on the way. Oh, I just realized this is supposed to be 0.06. I just noticed I was making way too much money all of a sudden. 0.06. Phew. Boy, oh boy. No wonder. Good catch. All right, so if I have a pullback, I'll trade with the proper size. Phew, I was 10 times too big there for 6 trades. And nobody caught it. All right, let's close these mistakes. Nice mistakes, but nonetheless mistakes. And then trade with the right size. There's 08. Oh, sorry, 06. Yes. Let's wait for a red candle. So what did that do to our bottom line? Where's the dates? Yeah. 10 times bigger than normal. That'll be a nice little bump on the equity curve. Red candle. Here's the right size. 1, 2. Yeah. Let's see what it did to us. It will skew the averages too, right? So now my largest wins are all going to be off. I guess it's one way to spoof your statistics. I'll just let them close by themselves if everything's working okay. Red candle. Here's number 3. 3 of the right size. 1, 2, 3. Yes. We're looking for the safety of the account. It's really the name of the game, right? Over time.
Japan's yen falls to the weakest in almost 16 years versus the pound.
Whoa. Over time, the account's moving in the right direction. And so there's no need to stress that, right? There's no need to push that speed. Just let it come to you. Right? I don't want to invite ruin. Right? So we started on time after the news, and we're making money. In the end, we're trying to get into a position where the next move is a sell, right? We're just trying to fulfill today, test the high, and maybe sell into the high, right? Tomorrow, we might be buying again, right? Ultimately, this is our target, but it has to happen one step at a time, right? Up, down, up, down, up, down, up, down. We're not looking for much more than what we've already done. It's a matter of revisiting the high. Right? Climbing back up the ladder. We're either going here or coming here. Let's see it come home. Average bars, 2 pips, twice the size of what we had yesterday at this time. And moving in the right direction. The next event on the calendar is a bell auction in 1 hour. Here's the fear and greed index. Greed, neutral. So let's follow our process. And get paid for it.
Taking a look now at the fear and greed index, 54 out of 100, which indicates neutral, while the crypto fear and greed index is 72 out of 100, indicating greed. Keeping an eye on the VIX today as well, which is currently up around 3.5% at 12.82.
If we're wrong, or if I'm wrong, this thing's going down here and maybe lower. That's a low probability. The higher probability is that we've already fulfilled an average move and now we're ready to go back up. We just have to see it to believe it and trade what we see, trade the facts. There we are. Favorable mistake is almost wiped clean. I don't want to make those too often. Skews the statistics, and then there'll be a bump on the equity curve that we have to answer for.
In 10 minutes time now, at the bottom of the hour, we see the release of the Dallas Fed Manufacturing Business Index. Forecast -12.5, on the prior -14.5.
The level on that squawk box, the sound changes every day. I've emailed their front desk. We'll see what happens. I'm sure I'm not the only one that's noticed. Right. It was so close, so close. Pum, pum, pum. Couple of extra boxes, spares, and the money to go with it, just in case we need it. To backup for the backup. Instead of putting all your eggs in one basket, prepare to be wrong. If I can get into that bottom box there, that'd be awesome. Recycle some trades. The US is a service economy.
I think the odds of Fed raising rates are quite low.
And so the US has been a service economy, slowly but surely. We can see through the numbers that exceptionalism is slipping away, slowly. And that's what the market, I think, is banking on, US weakening. Not forever. We'll see, day by day. Remember our dollar index. Right, we are range bound. Right? We have to test the bottom of the range. That leaves a lot of space in both directions. Both directions will be at play. And I'm just some guy on the internet, right? So this is not financial advice. I know nothing. I'm just showing you how.
Barry says we could stay on hold for an indefinite period of time.
I'm just showing you how I do it. 25, few more trades here. Awesome. Just kind of take this bottom box and put it up there. Get ready to catch a break. If we get one. Go.
At 10:30 a.m. Eastern Time, we get the Dallas Fed Manufacturing Business Index forecast -12.5 on the prior -14.5.
Go. Waiting to see if I can recycle any of this. I have one expensive one left. A little bit more. Everything we've done so far has been working out. Let's see if we can recycle and keep this trend going for another hour or so. All right, we're not going to be here all day. So at some point, we have to leave the casino. And hopefully we're going to leave with pockets full of change instead of empty pockets. So let's see where we can put these trades back in. Oh, I saw red. I saw red. I did, I swear. All right, so as usual, we went through our information gathering process. We started on the daily just to see what that particular group of traders is thinking of doing. Right? What are the daily traders, the daily chart close traders? What are they looking at? Right? And so they're comparing today's close or today's open candle with yesterday's closed candle. And that tells them whether or not it's worth taking a position or taking a stake into a position. And that's the idea, right? This is just the beginning of maybe something bigger, and we have to step into it slowly. And then understanding what this is telling us, being intraday traders, that story needs more information, more detail. So we go on the intraday scale and we find that information. We find the direction, we find the support, we find the targets. And then when we start looking at the 5-minute scale, you're now planning ahead. Right? You're creating an alternative for the what if.
1 minute remaining.
And then you trade the facts on this 1-minute chart. Waiting for the bond auctions to come through. I'll take a red trade. Oh, and 2 seconds too late. I wanted to buy on the bottom of that candle. By the time I
10
got
seconds.
my mouse up there, it was too late. Waiting on the news. There we go. One.
Still waiting for the data. Minus 19 spot 4, minus 19 spot 4, lower than forecast, minus 12 spot 1.
There's 2, 3. I'm up to 4. Let's recycle these trades. We're just waiting to see how the price will come out of the box. Right? Where are we going to come out of? And then we can catch it. Predict the next box. Right. Do we get to spend more? Bottom of the hour. Usually this is when our pullback is finished. From day to day, the market's never the same. Our process doesn't change. So it enables us to filter from the market what it is we're looking for. In our case, it's 3 pips, 3 pips. We're milking the cow instead of betting the barn. And by trading just one leg at a time, or maybe a couple of legs per day, you don't have to be in 24 hours a day, 5 days a week. Yeah. Red candle. I'll put a 5th on there. Waiting to see if we go slightly higher. It'd be nice to get back to this area here. Well, somewhere here. Thinking about buying this if you have not done so already. There we are. That's kind of the kind of stuff we want to see. Well, a slow grind in our favor. We can take advantage of it. Let it grind. There's a red candle. If you have not taken a click yet, I have to refrain because I did increase my size, so I don't have the luxury of having 6 clicks anymore. What did yesterday do? Yeah, a very slow day yesterday. All right. Here comes our money. Right. For the sake of argument, what if we assumed this was a low on the pullback and put our box on that low? All right, move this out of the way. And now use this to see where we go next. The potential exists. And we can go around here, or even down here for that matter. All right, but this is what we're looking for. All right, it's just a way of looking at moves in general. If we think this is the end right here, then put this on the low and start measuring in the opposite direction. Yes, yes, yes. Gotta love it. Everything works out. Slow. I think on Thursday we have the GDP. US GDP is on Thursday. Yes, 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 yes. GDP. on Thursday. So we have the GDP on Thursday. On Wednesday, I think there's a bunch of German EU news coming out. So this evening for us, tomorrow for you guys. And right now, we're almost done for the news. So we're just waiting to see what comes of this. Remember, time is what they use to throw us off our game. Right? We may have the best plan, and then we're going to throw it away because it's taking too long. And no, don't throw in the towel. If we can close all of this in the next 15-20 minutes, that'd be awesome. And target for today is 89.20 or so, right around here, right around this red line. That happens to be the previous high. If I can get there, right there. All right, so we have a pretty good idea what to do next. A test of the previous high usually has a bounce before a break. So we're going to sell the bounce. And next time around, maybe tomorrow or 24 hours from now, maybe we'll be buying the break. Make a higher high like we are trying to do today. Let's see. Just a handful of wins every day, more than enough to satisfy most prop firms, you know, your own accounts, whatever it is you're into. It's more important to put an end to it when you're a winner. Walk off the stage when everybody is, you know, applauding. Go. Rinse and repeat. If you get red candles, you can reopen the same trades. Ultimately, we're selling around the 9,000 area, 900 area. Not to come back to the south pole, but you know, just to make a wick on the daily candle. And maybe find the low of tomorrow. So let's go check out the history. Yeah, this is more like it. All right, what? 10 times bigger versus the normal size. Right. There we go. We're going to call that today's trading session. If you guys want to keep going, keep repeating this, right? Buy red candles, and ultimately you're going to be selling up here, right? Not because it's coming all the way back to the South Pole, but because we want to be creating a wick on the daily candle and finding the low of tomorrow before tomorrow goes even higher. All right, so that's it. Enjoy yourselves and trade safe. This will be the picture for today. This will be the recording for today's video. Right there. All right. Thanks, everyone. Bye-bye.